Tax brackets are income ranges that determine how much you owe in income tax. Governments use a progressive tax system, meaning the more you earn, the higher percentage you pay, but only on the portion of income that falls within each bracket. How do tax brackets work? In a progressive tax system, income is taxed in tiers, not as a flat percentage on the entire amount. For example, if tax brackets are 10% on income up to $10,000, 20% on income from $10,001 to $40,000, 30% on income over $40,000. A person earning $50,000 doesn't pay 30% on the entire amount. Instead, they pay 10% on the first $10,000, 20% on the next $30,000 from $10,001 to $40,000, 30% on the final $10,000 from $40,001 to $50,000. This results in a blended tax rate, which is lower than simply applying the highest bracket to all income. Key terms in tax brackets. Marginal tax rate, the highest tax bracket that applies to your income. Effective tax rate, the average percentage of income paid in taxes, usually lower than the marginal rate due to the tiered structure. Tax deductions and credits, reduce taxable income and lower the total tax bill. Why do tax brackets exist? Ensures fairness. Higher earners pay a higher percentage of income in taxes. Funds government programs, helps fund public services like infrastructure, healthcare, and education. Encourages economic growth. Lower brackets help lower-income earners keep more money, stimulating spending. Example of tax brackets in action. If a country has these tax brackets, 10% on income up to $20,000, 20% on income from $20,001 to $50,000, 30% on income above $50,000. A person earning $70,000 would pay 10% on the first $20,000 equals $2,000. 20% on the next $30,000 equals $6,000. 30% on the final $20,000 equals $6,000. Total tax, $14,000. Their marginal tax rate is 30%, but their effective tax rate is 20%, $14,000 divided by $70,000. How to lower your tax bill. Tax deductions, reduce taxable income, e.g. mortgage interest, student loans. Tax credits, directly reduce tax owed, e.g. child tax credit, energy-efficient home credits. Retirement contributions, contributions to 401k or IRA accounts lower taxable income. Quick recap. What are tax brackets? Income ranges that determine tax rates under a progressive tax system. How do they work? Different portions of income are taxed at different rates, not the entire income at the highest rate. What is the difference between marginal and effective tax rates? Marginal tax rate applies to the highest portion of income, while the effective tax rate is the average percentage paid. How can you reduce taxes? Use deductions, credits, and tax-advantaged accounts like retirement plans. Understanding tax brackets helps individuals plan their finances better, optimize tax savings, and avoid overpaying taxes.